And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Prep Monday, February the 6th. My name is John Hoagland. Thanks for trusting me with your time. We have a lot going on this week, even though there's not a lot of economic numbers. I think we're going to learn a lot about a lot of these markets this week. And as always, our focus here is on finding accurate context, good risk management, and always remaining patient in our trading. Good morning, everyone. Happy Monday. And now we're facing another full week of thrills, chills, and excitement here in the futures markets. No real major economic releases due out today. A very thin calendar for the entire week. Tomorrow, international trade in goods and services. Wednesday, we have the EIA petroleum status report. Wholesale inventories is due out also on Wednesday, but probably a lesser impactful number. Thursday, we have the usual jobless claims, which of course a lot of eyeballs are going to be on that after last week's employment numbers. Nat gas is always on Thursday. And then Friday, the Michigan consumer sentiment numbers due out. That's about it. Don't have a whole lot of talking Feds on the calendar, although we do have Chairman Powell speaking tomorrow. John Williams, I see on the schedule for Wednesday. Patrick Harker on Friday. I'm sure there will be a little bit more squawking from them going on throughout the week. But as we start the week here, stocks have pulled off the highs after what many investors, traders, economists, technicians, everybody is talking about the potential that last week was a breakout week. Investors and traders and economists alike, I think, are going to learn a lot this week, even with little known economic data due. Two speeches on Tuesday, Fed Chair Powell, and the State of the Union address on Tuesday night. It's going to be interesting. Earnings season continues to roll in this week with Cummins, Tyson Foods missing on both this morning. Lowe's also this morning. This afternoon, Activision and Simon Properties, the two majors in the afternoon today. And as I've been kind of alluding to, I'm expecting some volatility this week in many of our markets, as many of them are facing market state changes, not only in short time frames, but in longer time frame breakout possibilities. I think we're going to learn a lot this week about these markets. And as always, when we learn about the markets, we tend to learn about ourselves. Make sure we keep those lessons cheap this week. Again, expecting some decent volatility this week as things kind of play out. Again, a lot of these markets in critical areas as far as longer term and some shorter term breakouts. We're going to see all of this on the charts very shortly. Looking at the VIX this morning, up about 6%, 1946 last I checked. The dollar index up a little bit here this morning, 103.24, and the yield on the 10-year back safely above that 3.5 level at 3.6 and change this morning. So we've got a interesting start. I saw that we've got who was that? Spencer already talking about minding the gap. We do have some gaps this morning. Again, we'll see those on the charts very shortly. But as always, I ask that you hit the lucky like button, share, comment, question, feedback. Heckling and love are always welcome. Make sure you subscribe to our YouTube channel. You get notifications when we do go live. Speaking of which, not on YouTube, but this is the link to get into group coaching today at 12:30. And then this next link will be to get into Make Hogue Money today at 2 p.m. We got the afternoon session for Make Hogue Money today. Early session tomorrow. I think the resounding favorite is the early session. So we're probably going to be making some changes here in the coming weeks. And hopefully you're going to like what we're going to do. So good morning, everyone. I see we have the rooster crowing early this morning. First one in the room. You win the prize this morning, Rooster. Shaw, good morning. Caprice, Stan Trader, Octorap, Spencer, Minding the Gap already. Charles March, Jason Lewis, Caesar, J-Man, Haggle Matters, Philip, Kevin Laffey, good morning. Terry King, Alejandro, Rusty Golfer, Vince, my guy, is here with us. Jason Bartles, good to see you. Sarah Hall, prayers and love as always to you as well. Naztic, Bill Phillips, good morning. Andy Bleed, Marcelo, Scott Saw, and he conquered. Don Clemens, Vlad, good morning. George, Lacey is chilling in the front room, just lazing about as the center of the universe probably should be this morning. Michael, good morning. Khalid Turbine, good morning. Trey, thanks for trusting me with your time. Yes, thank you for trusting me with your time. Travis, good morning. Looking for resistance at 41.40.50 and support at 41.03 to 40.85 today. So we've got a couple of ideas for us there early. My brother Rick is with us. Good morning, Randolph. I love you. Anissa, good morning. Will, good morning. Jules, JT Irby. I think we're going to be switching it up to the morning mainly. We got some improvements here in my office that we're going to be making over the next 3 weeks. And as soon as we get done with that, you're going to see some changes in the programming here. And hopefully we're going to have a good time with it. Naveen, Kevin, good morning. Anthony, Peter, Brody, Barry Brooks, good morning. Anthony, good luck to everyone today and this week. Blessings. Yes, nice thoughts there, Anthony. Columbus, Dowitzer, Stephen Carlson, good morning from Atlanta. What is going on in Atlanta? It's 22 degrees here in Chicago after about a 40-degree day yesterday, but I think it's going to be continuing to warm just a little bit. It's February. We do have to remember it's still winter, but I think we're getting a little bit spoiled by some of the warmth that we've seen this winter. Good thing we got through the polar vortex here in the Midwest and the East Coast last week. Things are looking a lot warmer there, I'm sure. All right, so we are going to jump into the charts here. Start here with the E-mini S&Ps. We're going to start with the continuation chart because I think it's the best picture of what we're talking about as far as breaking market states. Hey, good morning, Fred. Tested above prior monthly high and now has come back below the prior monthly high. Yes, that December high, the December was a inside monthly day. We've broken out above the December high and now pulled back inside the range from December. So it's a lot of what we're talking about today, Fred, is we're going to learn a lot, I think, this week. Is this going to be a breakout failure? Is it going to turn around and continue the move to the upside? Only time will tell. We're going to trade what we see, Fred. Lisa, good morning. Anthony Bell, 73 in South Florida yesterday, 77 today. Boy, I'm going to be looking forward to getting into some warmer weather. I'm going to be actually, I think, in Naples, Florida, the beginning of June, kind of late for a winter getaway, but got a lot to do between now and then. So, all right, let's jump into the charts. All right, so this being the continuation chart, we can see our all-time high here. We can see the points of contact that this trend line has created. This CPI on December, I'm calling kind of a market anomaly, whatever, but we've now broken out and we've driven above that level. Now the question is, this December high that Fred was just talking about, we broke out above it, but we have failed to continue. Now what does it look like for the success of the downside auction off of that failure? And I'm not that impressed by it, to be honest with you. I think that this break has shown up to be a little bit hollow. We're still showing a breakout above this trend line. Our 200 session moving average has been now taken over by the 50 session. That's the golden cross. That's a potential market state change there. A hold above this trend line, a potential market state change. Now it's all about the December high as far as many traders and investors are talking about. So when we pulled off, what happened? I mean, we saw some pretty decent excess here on Thursday. That excess held on Friday, but what happened on Friday? We lost about 3,400 in open interest. So it's not like there was a major change in sentiment. We just took out some profits from the week, quite possibly. Here's the daily chart. You know, get a little bit more of a picture of that. There is a gap back here that goes up to about 42.20 quarter. That gap close is really kind of holding our weekly kickoff high here. I'm looking for the market not only to take out the December high and stay above it. I'm looking for it to stay above that. So the market does have some work to do. The volume on Friday was strong. We've had some pretty decent volumes here. Even on the way up, we saw some decent volume. But again, when we were looking at the auction process and how good the market is doing, I thought that the break on Friday was a little bit hollow, again, because of that loss in open interest. It's not like we had a whole bunch of new sellers coming in pushing this market lower. It was more of, let's take some profits off the table and see what happens next week. Now, we've got a gap to the downside here this morning. Here's the 30-minute chart. Settlement is 41.4775. Here's our gap. We've got overnight inventory to the short side. We've got lower highs, lower lows off this high that took us basically right to the beginning of that gap. The beginning of that gap is right around 42.06. Well, we put in our high last week at 42.08.5. We did not fill the gap. We tested to it and rejected. Lower highs, lower lows. Are we looking for opportunities to sell strength here? Well, in the short time frame, I would say we are, and we have that opportunity this morning. We have a gap to the downside with overnight inventory to the short side. Was this enough of a reconciliation of that short time frame accumulation to the short side? What is our short time frame, short community looking for? They're looking for help. They're looking for sellers to come in and continue to push this market lower. If not, we may see a move back towards the gap close, but we're using gap rules. If we can't close the gap relatively early, we're looking for opportunities to sell strength. One thing that I'm going to be looking at on the downside here is the basically kind of the base of the late spike from Wednesday. Okay, we have not tested through this. I could see us maybe testing down to take out this naked volume point of control here to kind of close up or take care of or repair this business here that you kind of got left behind before looking for opportunities for longs. I'm not going to fight any downside move. I'm going to be looking for structure if I do find opportunities to look for longs. And again, anywhere between the base of this late spike here, which is right around 40.90, down to this point of control, 40.80. It's a $10 area that I'll be looking for information. Not necessarily acting yet, but looking for information there. Now, I know some of you are probably saying that when we look for confirmation, it usually costs us in trade location. this area down here looks like an area where I can limit risk. So I'm going to be kind of peaked if price does get down to this level. Take a look at the TPO chart. This is with the overnight. Let's go without the overnight to start here. So this was the excess we left on Thursday. Okay, it doesn't look like huge excess in the profile, although there is excess. We have almost a double distribution trend day to the downside on Friday, although it doesn't look all that confident. Where are we now? We are trading basically in the late spike that we left behind on Thursday. This area down here is the area that I was looking at, 41 to 4090, an interesting area, that naked point of control down here. Okay, that's going to be the TPO point of control as well, so they're just right next to each other. Interesting area down here. What else did I want to say? Almost kind of a B-shaped profile. The IB is neither the high nor the low of the regular trading hour session. It's a normal variation day, but with a kind of a B shape, which kind of supports the idea that this was a long liquidation break more than new business coming in. Watch this week. We're going to see, as I've been saying, we're going to learn a lot. Yeah, that point of control around 4080 certainly is in play here. 41 to 4090, 4090 to 4080. This whole area down here looks ripe for opportunity for me. Direction, somewhat yet unknown, but I just think that there's a lot of information that we're going to learn in this area down here. Should price get there, Jules? So, again, what is the market attempting to do? It's attempting to go lower. How good of a job is it doing? Friday, I'm giving it a C for a grade for the downside auction that's currently in play. It did not bring new business. What about crude oil? What's going on there? Well, here's the continuation chart. Overall, in the long time frame, the market is putting in lower highs and lower lows. The structure is to the downside. What did the daily chart do? Well, we've got kind of a coiling thing going on here, and we broke out below that coiling activity on Friday. I've been saying that this market has been loading up on open interest. And again, we added another 24,000 in open interest on this breakout to the downside. So that's a good downside auction. It's increasing in volume. It's increasing in open interest. We're, I think, going to be looking for opportunities to sell strength this morning. However, we're starting off the week with a little positive action here. So again, that breakout day from Friday came in with a lot of open interest and high volume. Long time frame downside structure is intact. Is this a new leg to the downside in the short to medium time frame? Is this all going to end up being some sort of range? Stay tuned. We don't know. Here's the 30-minute chart. So we had the kind of that trend line here came across right at the overnight low Thursday into Friday. We held there. We looked higher. We rejected. Is there a lot of rejection up here? Is there a lot of excess? We're going to see on the TPO chart here in just a couple of minutes. But no, we saw some sellers come in and open interest jump, volume jump. Where are we now? Do we have overnight inventory? No, not really. We're in range. We're in value. There is the possibility of an upside move in the form of repair from this downside move on Friday. Take a look at the TPO chart. Double distribution trend day. Low excess, high, however, excess nonetheless. Double distribution, balance, imbalance to balance. Where are we? We're in balance. The market has tested a point of control in this lower area of balance. If we spend time above this level, there may be the possibility for repair to bring price up to the point of control, which is right up here. Quite possibly. It doesn't necessarily break structure to the downside if we were to do that. So we're in range, below TPO value, but inside volume value. Interesting area down here. IB, neither the high nor the low. So we've got 2 strikes as far as our IB theory as being quite possibly a high or a low from the regular trading hour session. That's going to change here now. So now we're into the NASDAQ. Here's the continuation chart. Okay, off the all-time high. Boom. 1, 2, breakout. Look at the difference here, though. The 200 session is here. We don't have the golden cross here yet in the NASDAQ. NASDAQ has been much deeper as far as the pullback off the all-time high in percentages. So, but we are, take a look. Here's the December high. We're above it. We have not accepted above that level in the S&Ps. However, we have in the NASDAQ. So the NASDAQ has been presenting as a stronger market on this upside move. What about this pullback? Well, we added open interest on Friday, 1,800 on higher volumes. So the pullback is actually performing better as an auction process than it is in the S&Ps. But this pullback is also well above an area in the S&Ps that we're looking for acceptance above, and that's Friday, December's high. Similar markets, so different, so different. We'll take a look at the 30 here. Lower highs, lower lows, it's very similar. Gap, can't close the gap. What are we looking for? This is in the wrong spot. It's almost like I didn't do this, but I did. This is weekly kickoff high, which should be 13,150. Right there. This is last week's high that should be up here. Weekly kickoff low, 11,753. Right about here. And last week's low here. This should have been done. But what I'm really looking for on a pullback is that same kind of level here in the NASDAQ where the market really fell out of balance last Wednesday on the FOMC meeting, about 12,200. Settlement is here, 12,624. Again, we have gap. If we can't close the gap, we're going to continue to look for opportunities to sell strength. With no economic numbers and very little information coming out today, what tends to happen in that case? What tends to happen is if there's no bad news, the market tends to turn and grind to the upside. If we end up getting too short in short and medium time frame, which we're already short in the overnight, we may see a decent pullback, which could give us opportunities if we are in the frame of mind and hypothesis that we're looking to sell strength. Take a look at gold. So here's the continuation chart. Okay. I don't think we're really looking at any really long time frame trends here. We're looking at a medium time frame upside move that has now broken. how good of a job did it do when it broke? Take a look at the daily chart here. So here's a trend line, 1, 2, 3, 4 possible points of contact. So when we broke out and closed below this on Thursday, what did we do as far as open interest is concerned? We lost about 10,000 in open interest on Thursday. What did we do Friday on the continuation? Again, estimated loss of 18,000 contracts. So this move to the downside, it's on pretty decent volume. I got to tell you, the volume on Friday was really decent. But again, we're liquidating positions, not adding to positions on these down moves overall. So this pullback here, this break right now, to me, gets, again, an average, a C, as far as performance for the change in direction. A change in direction like this, I would look for increases in open interest as traders try and get into shorts, but we don't see that necessarily happening here. Here's the 30. Okay, 10,000 in open interest, 18,000 in open interest, a pretty direct move to the downside. Where are we? Well, we've got a little bit of long overnight inventory, I would say, just a little bit. But we're inside value, so very little change in the perception of the value of an ounce of gold here just so far. Of course, look at this down here. Last week's low, value low, point of control, settlement, all right here. This is a target-rich environment here. If we have an opportunity down there, it gives us the chance to limit risk in either direction. That's if we get the opportunity there. So, there is, of course, the probability or the possibility of a repair to the upside. Think about the auction process on the way down. Volume was good, but we lost open interest. It's not like there's a whole bunch of investors and traders selling this market. It's long liquidation. If that's truly long liquidation and we don't bring new business into the downside, that's going to hang on a second, I'm sorry. If we don't bring new business to the downside, that's going to create the opportunity for this pullback breakout to the downside to fail. We may end up getting too short. Take a look at the TPO chart now. So Friday was unemployment day. The upper extreme of the initial balance is the extreme high of the session. B-shaped profile indicates long liquidation. Well, we had long liquidation on Thursday as well. B-shaped profile, B-shaped profile. Long liquidation takes selling power away from the market. Without new business coming in, how good of a job is this market doing? It's not. Now that can change, of course. Anything can. ACH. Anything can happen. What about that low? Overnight low is right down there as well. Back to the 30. Overnight low, last week's low, low of value, point of control, settlement, target-rich area there. I would say we're probably going to see an opportunity there very soon. Okay, so the euro is very similar in structure to the S2 to gold. However, it took us through Friday to kind of close below this trend line to mark a possible acceptance. Did we add open interest on Friday? No. We lost open interest. The market was adding open interest all the way up. It lost open interest. So this break to the downside, again, feels a little bit hollow. Technically, we should be looking for opportunities to sell strength in gold and in the euro. But the open interest does not necessarily indicate a healthy new auction to the downside, at least not yet. We've got a medium time frames market state break here. Just about every market we've looked at has recently or is in the process of a market state change. Volume was pretty strong late last week, but open interest not so much. Here's the TPO chart. Again, IB high of the session. Wednesday or Friday unemployment, normal variation day to the downside. Kind of toothy, not very confident. Again, it's very lots of kind of visuals kind of left behind here. So far, it's continuing its push to the downside. We see the dollar continuing to try and push to the upside here this morning. It's been kind of tough to take out the overnight high here in the dollar. Interesting. So here is our excess Thursday, Friday, unemployment, B-shaped profile. Did we lose open interest? No. We gained open interest, largely still range bound to this point to Friday. We have a potential breakout to the downside now. Okay, we added open interest again. It wasn't a long liquidation event on Friday. We added approximately 47,000 in new open interest to the short side on Friday. Take a look at the daily. Here was where we should have started. So we failed above as far as the range bound activity. We took almost that whole range on Friday to add that 47,000 in open interest on high volume. The continuation now is down below that weekly kickoff level. We are now in breakout rules, which means when we break out of an area of balance, we go with the breakout. Maybe we're a little late to the party here. Take a look at the 30. Overnight inventory is short. The market is open and is continuing to push lower. I don't want to step in front of this. I mean, this is a market state change. There is plenty of space down below. Take a look. Take one quick look here at natural gas. Continues to try and push to the downside. Still kind of cautiously lower for the last part of the week. A very narrow range for the natural gas last week. Still holding, however, downside structure. No overnight inventory. In range. Close to value. Patience. Look for last week's low for opportunities. Look for our overnight high also for potential opportunities. We're right in the middle of that. You're going to chill here. Take a look at the TPO chart. The upper extreme is the upper extreme of the initial balance is the high of the day from Friday. So it looks like 4 out of the 7 of our markets did have an IB high or low remain for the rest of the day. But we're right in the middle here. Potential for repair to the upside. What do? We added 10,000 in open interest down here. That to me is still showing a relatively healthy downside auction. Question, is it getting too short? And we may be seeing some of that in the daily with the uncertainty here, a little bit of uncertainty here. I don't know. It's going to be a fun one. So again, there's going to be a lot to learn this week. There's a lot to learn every week, really. But just with the way these markets are and the state that they're in, there seems to be some pretty interesting opportunities, some interesting changes. Trade what you see. That's all we can do. We just have to trade what we see. So hopefully we've got a little bit of an idea of context for today and for the rest of the week. I'll look forward to seeing everybody at group coaching and then again at Make Hogue Money and at the end of the day with the reflection. As always, I appreciate you spending a little time with me, and I look forward to seeing you very soon. Let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. Get out there and profit. Have a great trading day. Trade well, and I will see you at 12:30 again for group coaching. Have a great session.